Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, August the 25th. My name is Eric Wilkinson, and some of you realize that it's the 28th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. And remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Here in the United States, because we don't have a whole lot going on across the pond, yesterday was a bank holiday, but they don't have any economic data today. We got preliminary wholesale inventories. Now remember, this is one of those numbers that I don't love, because if manufacturers are building inventory based on future demand expectations, they are going to build inventory. So that's not a bad thing necessarily ahead of demand. So this one is creeping up, but I believe it's because they see demand in their future. So wholesale inventory is coming in at 0.7% higher than the expected 0.1%, and last month's number revised from unchanged to an increase of 0.1%. So building inventory is generally not good, especially if the economy is pulling back, which we've seen some of those economic data points yesterday not being so great. So, you're going to have to read the tea leaves on that one. And then we got CB, consumer confidence, came in at 133, higher than the expected 126.6, and they revised last month's number up just slightly. The Richmond Fed Manufacturing Index, remember we saw Philly Fed not do so well last week. We got the Richmond Fed today, and it came in at 24, expected to be 18, so better than expected there. That's nice to see after we've seen some of those economic data points not come in as well as we would like them to be. So still looks like the economy is moving along nicely at a nice pace. Nothing too robust and nothing too sluggish. All right, let's look at crude oil coming off today after touching again on the 50 Fibonacci. That is going to be a major line of contention to get through, especially with the 50-day moving average right there in line with that. Again, coupled with the point of control just slightly below this. All of those levers and pulleys are going to want to hold crude oil right in and around these areas between 70, 65, kind of like what I've been talking about. So crude oil really not giving us a whole lot of directional bias. Today, gold futures, after yesterday, gold futures looked like it was really topping out. Today, if we get this doji, which is counter-opposing to the previous doji, that is a continuation pattern. We need confirmation and a settlement below, basically, let's call it 1,200 for the most part, in order for a confirmation of the downside here. Okay, in gold. But right now, to me, I think gold's going to continue to kind of trudge its way a little higher. Bitcoin moving higher today by about 300 points, kind of breaking out of that 6,000 range that we've been stuck on, that 6,000 handle, into the 7,000s. I'm sure Bitcoin people are rejoicing that all over the place. Bonds coming off by about a half a point again today, touching on that 50-day moving average. That should act as support, but again, mandate is increased interest rates. Economic data is pretty good. Bonds cannot go anywhere but down from here, with interest rates likely to increase. So I've been talking about this. As a matter of fact, I got long the TLT yesterday, so it's looking pretty good so far right now. VIX is moving higher, which is a little bit counterintuitive with the equities moving higher, but I think that that's because a lot of people are starting to put on protection at these levels, buying puts. That increases volatility as they add protection at these higher levels. All right, so Dow Jones Industrial Average up about 15 points, but as you can see, kind of topping out. Hit this value area high this morning and yesterday, kind of kissed it, we could say, but it's kind of creating a little bit of a toppy pattern here in all of the equities. Nothing that we can really say right now, but if the day were to end like this, I would be very concerned tomorrow about the directional move we're going to have going forward for at least the next few days, because again, this looking a little toppy, despite the fact that we're in positive territory there, it still looks a little like we've got a spinning top doji in a sense at the top of a move, which is very bearish when you combine those two. Anytime you have that doji in a series of increasing moves, that isn't usually, if it's in an uptrend or a downtrend, it doesn't usually have as much strength as when we see it at the top of a big move like this. So I'm kind of keeping my powder dry right now. I haven't added anything because of the way that these markets are setting up right now. I'm going to kind of hold off and see if we start getting a little bit of a rollover here on the equities. So probably won't do anything until tomorrow, maybe make my decision late in the day. But this is what we can see with the overnight inventory. It actually got kind of short and then kind of long. So maybe those all washed each other out. But there is still a lot of longs in the market that probably have weak hands that the overall market's going to try and flush out here. Maybe just a short-term correction. So sure, a lot of people that have been long this entire time have very, very itchy trigger fingers to cover even the trades on the last couple of days. So that is a catalyst to roll this market over. Having said that, I'm not adding any positions as of right now because I want to see how this all works out, right? So TLT is working out nicely. A couple of other ones, all my positions are kind of right where I want them to be. Of course, like them to be a little bit more profitable and have all my directional assumptions come in line, but that's not always the case. Sometimes these trades go against us, and that's what I'm going to talk about in Thursday's webinar, is what do we do when trades go against us? How do we defend that? Some people will just close out that position, say the probability's got me, I'm moving on with my next trade. I don't necessarily move in that lockstep order. If my directional assumptions change, then sure, I'll cover that trade for a loss. If it hasn't, and I believe it's just a market move against me and that I'm getting beat on the probabilities, I'm going to show you how to manage that trade, become mechanical, and increase your probabilities of success going forward. So go to protraderstrategies.com and sign up for that. That's about all I got for you. Other than, hey, follow me on Twitter at Wolfman's blog or our parent company at ProTraderStrat. All right, if you can't take that, take it easy.